Hey guys, this is Dusty LaBoss here with Century21. I've got a great tip for you guys today. I was actually able today to get my mortgage insurance dropped off of my primary residence. Now, for those of you who put 20% or more down on their property, good for you. You didn't have to have your mortgage insurance on there. But for the rest of us living under that 20% down threshold, here's a great tip to help get or to try to help you get your mortgage insurance dropped off of your loan. This has saved me like close to $200 a month, and I just got confirmation today that it was removed. Obviously, banks don't make it easy for this to happen, so you're gonna have to be consistent and follow up with your bank and be proactive on staying on top of them. But here's the deal. If you've bought over the past 2, 3, 4 years, even last year, guys, home values have risen so sharply that there's a good chance that the value of your home has gone up big time in relation to what you currently owe. Mortgage insurance is supposed to drop off once you reach an 80 to 20% loan to value ratio. For me, I bought a house at a certain price point. It's gone up substantially. I bought in 2020 and my remaining balance obviously has gone down. So I called my bank and I requested to have my PMI removed, or mortgage insurance. Those are the same thing. PMI and mortgage insurance are the same thing. So I called my bank, asked to go through the process, and essentially what it entailed is paying for an appraisal. It cost me $150 to get done for a formal appraisal that the bank would send out and get done. And I had to send an email about any improvements that I had done to the property. Now here's the good news. Even if you haven't done a lot of improvements to your property, there's probably still a really good chance that even if you put like 5 or 10% down when you bought your house, even like a year or two ago, there's a good chance that you're already at that 80 to 20% loan to value ratio. So I had to pay $150 for an appraisal, and then I had to basically send them an email of all the improvements that I've done. We had done a lot since we had moved into the property back in 2020. So I put the list, how much it cost me, when it started, and when it finished the project. And I sent that in, and I paid for the appraisal. Big shocker. I sent the email in, I never got any feedback. Nobody ever followed back up with me. Turns out it like went to nobody. The communication was terrible. So, and I won't tell which bank I'm with just to not offend anybody out there, but what I'm saying is like, they have no interest in being super proactive about not collecting mortgage insurance. So you have to be consistent. Set like a reminder, send that out, call your bank up and say like, hey, I believe my value of the home has risen. I believe I'm at that value and I would like to get my mortgage insurance removed and go through their process. I was, shout out to one of my preferred lenders, Jeff Zuloff. Was very thankful that he gave me that advice, because now I'm saving like $1,200 to $1,300 a year just by going through that process and paying $150. So anybody out there that is looking to save money, that's a good tip. Get it going. Have a great weekend, guys. Bye.